Hello, and welcome to EPK Capital's daily market briefing for Monday, November 10th, 2025. Last week, the question was, is the AI bubble finally bursting? After a brutal Friday, tech stocks and the Nasdaq plummeted, wiping out over $1 trillion from AI-linked companies. Major banks warned of a potential 10 to 20% market drawdown. But this morning, the market tells a different story, with a wave of green sweeping global markets and US futures pointing sharply higher. The story isn't just AI valuations. It's about a 38-day logjam in Washington, D.C. that might be breaking. Today, we cover the global market rebound, the big macro story, crypto's big bounce, and the week ahead. Let's get into the data. As of this morning, Monday, November 10th, here is where we stand. In Asia, Japan's Nikkei 225 closed up 1.3%, Hong Kong's Hang Seng climbed 1.6%, and China's Shanghai Composite gained 0.5%. In Europe, the Pan-European Stoxx 600 is up 1%, Germany's DAX is up 1.4%, and London's FTSE 100 added 0.6%. In the US, S&P 500 futures are up 0.7%. Nasdaq futures are rebounding by 0.77%, and Dow Jones futures are positive, up 0.1%. To understand this rebound, we must recall Friday's damage, when the US market saw a major sell-off driven by fears of an overheated AI boom. The S&P 500 fell 1.1% to 6,720. The Nasdaq Composite tumbled 1.9% to 23,053. And the Dow Jones fell 0.8% to 46,912. The VIX, Wall Street's fear gauge, jumped 8.3%, driven by profit-taking in AI giants and warnings of highly overstretched valuations. What changed between Friday's panic and this morning's optimism? The answer is politics. For 38 days, the US government has been in a record-long shutdown, creating massive economic uncertainty and blinding investors and the Federal Reserve. Due to the shutdown, critical economic data like the October non-farm payrolls and key inflation data have been delayed. The Federal Reserve, flying blind without data, cannot make data-dependent decisions. Into this vacuum, private data painted a bleak picture, with 153,074 job cuts announced in October, the highest since 2003, led by the tech sector. On Friday, the University of Michigan Consumer Sentiment Index dropped, with its current conditions component hitting an all-time low. This combination of AI market perfection and government gridlock was toxic, leading to Friday's sell-off. The big news is that the political logjam is breaking, with the U.S. Senate passing the initial stage of a deal to end the government shutdown. This measure secured the minimum 60 votes, driving this morning's risk-on rally. An end to the shutdown means stability, as government funding removes economic drag and uncertainty. It also means clarity, as delayed economic data will be released, giving the Fed and investors a true look at the U.S. economy. This hope is currently outweighing AI bubble fears, especially in the cryptocurrency market, where the rebound has been dramatic. Over the weekend, Bitcoin retested its key support at $99,000, with fears of a deeper correction. However, this morning, Bitcoin surged 3.8% to $106,030. Ethereum bounced even harder, up 6.9% to $3,618, and the global crypto market cap surged nearly 5% to $3.58 trillion. This surge is driven by the shutdown deal, as crypto moves in lockstep with risk assets, improving market sentiment and liquidity. Analysts note that the last major US shutdown ended with a 5-month Bitcoin rally. Second, a major political comment from President Trump reaffirmed his pro-crypto stance, calling for the US to become the Bitcoin superpower. This high-level political endorsement has provided a significant tailwind for the asset class. Third, strong on-chain data showed wallet accumulation in the $95,000 to $100,000 range during the dip. This indicates long-term holders were buying, and seller exhaustion was setting in, confirming bulls are still in control. In other crypto news, the UNDP is launching a global blockchain training program, and Japan's FSA will support a stablecoin pilot program. Institutional and government adoption continues to be a quiet, powerful trend beneath daily price action. This brings us to the week ahead, where the market has shifted focus from AI bubble panic to shutdown deal optimism. Today, November 10th, all eyes are on the US market open, questioning if morning gains in futures will hold. More importantly, we await official confirmation and a final vote on the government funding deal, as DC headlines will drive the market. Tuesday, November 11th, brings UK unemployment data, and Wednesday, November 12th, features the German Consumer Price Index. The most important event will be the release of all delayed US economic data once the government is back online. The market is celebrating the end of uncertainty, but the next phase will be digesting the reality of the US economy after 38 days in the dark. It's a relief rally for now, but the data will determine if it lasts. That is your complete market and macro update for Monday, November 10th. Thank you for joining me. Be sure to subscribe to EPK Capital and click the bell icon to get these daily briefings first. I will be back tomorrow to analyze the market's reaction. See you then.